Good afternoon, everyone. Thank you for taking the time to join today's webinar. My name is Ashima Sood, and I will be your moderator today. I work in the commercial litigation team at Gall Solicitors in Hong Kong. I'm also a member of Law Asia's Banking and Finance Committee, which has organized today's webinar, and I welcome you all. Today's webinar will focus on recent developments in B2B payments in the fintech space, blockchain solutions for seamless cross-border payments, and relevant laws and regulations governing such transactions. We have an interesting lineup of speakers for you today from Singapore, Japan, Vietnam, India, and Hong Kong. So without further ado, let's get right into it. Our first speaker today is Surin from Singapore. Surin is a lawyer by profession. She's a senior associate with the corporate department at Withers Cutter Wong. Her practice covers mergers and acquisitions and transactional and financial services regulations. Surin's presentation today will focus on the regulatory framework governing B2B fintech payments, payment methods in Singapore. There's also going to be a short Q&A session at the end of everyone's presentation. So if you have any questions, then do let us know. Surin, over to you, please.
Thank you, Ashima. So hi, everyone. I'm honored to be invited to be a panelist at this Law Asia's webinar. So today I'll be touching on the regulatory framework governing B2B fintech payment methods in Singapore. So the main regulatory framework governing payment methods in Singapore comprise of the Banking Act, which governs traditional payment and banking methods provided by traditional financial institutions, such as banks, merchant banks, and related institutions, including their credit card and charge card business. However, with the introduction and advent of payments as a service, the rise of alternative payment providers and systems, particularly due to the advancement of the electronic payment systems, meant that existing legislation which favored traditional payment and banking methods were not suitable or effective in the regulation of these new payment systems. And in fact, they were not regulated. And as such, new legislation needed to be introduced to regulate these new payment systems in order to safeguard the financial services infrastructure. So due to these concerns, the Payment Services Act was introduced in 14 January 2019. And this combines the old Payment Systems Oversight Act and the Money Changing and Remittance Businesses Act into this new act. But the key change that the PSA brought about is that it expands the regulatory framework to cover 6 new payment services. So let's now take a look at what payment services are regulated. So the first payment service is the account issuance service, which is the service of issuing a payment account or any service relating to any operation required for operating a payment account. So this would cover products such as e-wallets, including certain multi-purpose stored valued cards, or a non-bank issued credit card. And then you have your domestic money transfer service and your cross-border money transfer service, both of which are fairly self-explanatory. So as long as you are accepting monies for transfers within Singapore, then you need to be regulated to provide domestic money transfer service. And if you are accepting monies in Singapore to transfer overseas, or accepting monies in Singapore from an overseas person, then you would need a cross-border money transfer service, payment service. Then you have the merchant acquisition service, which is any service of accepting and processing a payment for a merchant pursuant to a commercial transaction. So this service is usually required when you're providing a point of sale terminal or an online payment gateway, much like the QR codes that we are using to make payments nowadays. Then the next would be your e-money issuance service, which is the service of issuing e-money to any person for the purpose of allowing a person to make payment transactions. And then you have the digital payment token service, which is any service of dealing in or facilitating the exchange of digital payment tokens. Lastly, as a payment service, you have your money changing service. This is not a new service that's regulated per se, but it's just part of the old act. So as can be seen, 4 out of these 6 new payment services involve services which are required to support electronic or digital payment systems, which demonstrates the advanced digitalization of the financial infrastructure. So you might be wondering now what the difference is between an e-money and a digital payment token. So at its core, an e-money is denominated or pegged to a fiat currency, such as United States dollars or Sing dollars, whereas a digital payment token is not denominated or pegged to any currency, but still can be transferred and used as payment for goods and services. So your digital payment token service would cover products such as cryptocurrency or coin offerings and exchanges. So let's touch on the key criteria of the licensing framework. The Payment Services Act is regulated and administered by the Monetary Authority of Singapore, or MAS for short. There are 3 types of license that are issued under the PSA. Firstly, the money changing license. Secondly, the standard payment institution license. And thirdly, the major payment institution license. We won't be going through the money changing license today, but for the standard and payment institution licenses, this would be required if you're providing any combination of the 7 regulated payment services that we went through earlier. The difference between the standard and the major payment institution is that you will require a major payment institution license if the payment transactions that you are processing exceeds specified thresholds. For example, if the monthly average of the total value of payment transactions that's processed in a calendar year exceeds 3 million for any single payment service, or 6 million for 2 or more payment service, then you would require a major payment institution license. So in order to apply for a payment institutions license, an applicant will need to be a Singapore incorporated company or the Singapore branch of a foreign corporation. And MAS approval will be required for any person to become a 20% controller of a payment service licensee. And this is an obligation that extends beyond obtaining the license. So any subsequent change of shareholders that's above 20% will also require MAS approval, even after obtaining the license. For the directorship requirements, the applicant would require at least 1 executive director to be a Singapore citizen or permanent resident, or 1 executive director, which is a Singapore employment pass holder, and at least 1 other director, which is a Singapore citizen or permanent resident. Then you have minimum base capital requirements, which for standard payment institutions would be 100,000 Sing dollars, and for major payment institutions would be 250,000 Sing dollars. MAS will also require a guarantee of security deposit for its licensees. Strictly speaking, this is required only for major payment institutions, but MAS will have the right to require a deposit in any case. And depending on the type of payment transactions processed, the security requirement can be between 100,000 to 200,000 Sing dollars, which must be provided in the form of a cash deposit or bank guarantee. So these are some of the considerations that will need to be considered. MAS will also judge the fitness and propriety of the applicant. So the shareholders, directors, CEOs, and employees should be fit and proper in accordance with the MAS guidelines on fit and proper criteria. The key individuals that are running the payments business must also be judged to be competent. So directors and CEOs of the applicants should have sufficient experience in operating a business in the payment services industry or related areas in the financial services industry. So things like management experience, educational qualifications, and professional certifications will be considered. Licensees are also expected to implement adequate compliance and audit arrangements depending on the scope and size of their operations. And now, with the emphasis on online related services, MAS now requires applicants to put in place adequate technology risk management policies. So applicants who intend to provide online financial services must perform a penetration test of its proposed online financial services, remediate all high-risk findings identified during the testing, and conduct independent validation on the effectiveness of the remediation actions. So penetration testing is an in-depth evaluation of a financial institution's cybersecurity defenses. There are various testing methods that can be employed depending on the scope of the online services provided. Post-licensing, a financial institution is also expected to conduct penetration testing on a regular basis, at least once annually, or whenever systems undergo major changes or updates as an ongoing license obligation. So finally, let's take a look at some local examples which have been licensed or applying for license to demonstrate the type of licenses an applicant would require. So my first example would be Mulago, which is a service provider in Singapore providing cross-border payment solutions, I think focused in the Indonesia region, such as automated payment processing and cross-border remittance services. It has obtained a payment institution license to provide account issuance service, domestic and cross-border money transfer service, e-money issuance service, and money changing service. And for more household names, you have service providers such as PayPal and Stripe. So for PayPal, on the B2B side, it provides payment processing and payment platforms for businesses, allowing merchants to accept and make payments. So it's applying to provide payment services of account issuance service, domestic and cross-border money transfer service, and merchant acquisition service. Whereas for Stripe, it supports e-commerce platforms by facilitating payments transfer, in particular the credit card payments. It is applying to provide payment services of domestic and cross-border money transfer service and merchant acquisition service. We should note that PayPal and Stripe has not been formally licensed yet, but they're currently operating under an exemption that was introduced during the transition period when the new Payment Services Act was introduced for existing payment service providers to obtain their licenses. Of course, the specific licenses required would depend on the specific activities an applicant is seeking to provide. But these are some of the examples which I thought would be more relevant to share with the audience. So back to you, Ashima.
Thank you, Surin. That was very interesting and very clearly explained. I think Singapore is definitely building a solid reputation when it comes to regulating fintech activity. Next, we have Yuri from Tokyo. Yuri is a senior partner at Atsumi and Sakai, heading the firm's fintech team. She is also the vice chair of Law-Asia's Banking and Finance Committee. Yuri deals with a wide range of banking, finance, and capital markets issues, and is also well regarded for her work on fintech issues, including payment services, crypto assets, lending, factoring, crowdfunding, and APIs. She's, of course, a subject matter specialist, and I'll let her provide you with an overview of the Japanese fintech ecosystem with regards to B2B payments.
Thank you, Ashima. Hello, good afternoon, everyone. I am Yuri Suzuki, based in Japan. So today, I will briefly introduce Japan's B2B fintech market, and then we'll explain to overview the relevant laws. Yeah, shoot. Oh. Firstly, how's the current B2B fintech payment market in Japan? This sector in Japan includes a wide range of services, not only the payment step, but also the services associated with the B2B payment. There are also different types of payment services, such as credit card payment, remittance or money transfer, and payment intermediary services. Additional services ancillary to B2B payment include invoicing, in company's internal expense management, and further financing services such as lending and factoring. Fintech startups as well as financial services companies are very active in these areas in Japan. In Japan, consumer payment services are becoming increasingly cashless, but B2B payments are lagging behind. In addition to bank transfers, promissory notes are still used as a method of payment for business-to-business transactions. However, one thing is that pandemic has encouraged a shift to cashless payments, and the Japanese government's initiative to promote digital transformation in recent years has led to a series of institutional changes such as eligible invoice storage from data storage of electronic transaction soon. And promissory notes will be abolished in 2026. So it is expected that these changes will accelerate B2B fintech payment. And in fact, the B2B payment sector is now attracting attention from fintech startups, non-banks, and card issuing companies. From next slide, I will introduce the Japanese legal system relevant to B2B payment. I listed up license categories which may be relevant to B2B payment services here. Banking business includes remittance services and is regulated by the Banking Act. Funds transfer services, crypto assets, and stablecoins, which are used as payment methods, are regulated by the Payment Services Act. Credit card business is regulated by the Installment Sales Act. So we have a couple of important laws relevant to this sector. So if you plan to start B2B payment services, which include any of the regulated items here in your business scheme, you may need to consider what kind of laws is applicable, or you may think about consulting with lawyers about whether any of these laws are applied to your scheme. Funds transfer service, which is typically say the remittance service. Remittance services considered as exchange transactions, which is a legal term, meaning accepting a request from a customer to transfer funds using a mechanism to transfer funds without directly transporting cash between parties separated by distance. So remote transaction or to transfer funds in response to such request. Those kind of service are typically considered as exchange transactions and will be regulated. And banking business license or registration for funds transfer service is required. But banking business license is quite hard to obtain. But non-banks in Japan can also provide remittance services by registering as a funds transfer service under the Payment Services Act. And there are 3 types of funds transfer service license, depending on the maximum remittance amount. So type 3 is up to Japanese 50,000 Japanese yen, which is almost equivalent to 350 US dollars now. And type 2 can deal with up to 1 million Japanese yen, which is equivalent to 7,000 US dollars. And type 1 has no limit. And in case of type 3, retention of user funds is permitted up to 50,000 Japanese yen. In case of type 2, there is a restriction if the accepted amount exceeds 1 million Japanese yen, and retention is not permitted for type 1. As far as B2B payment is concerned, firstly, the type 3 is too small amount, I think. So maybe you think about a type 2 or type 1 is appropriate from perspective of the remittance amount. Type 2 is still, but type 2 is still dealing with the small amount in light of B2B payment. However, type 1 requires registration plus authorization and must comply with very strict regulation. So many businesses have been registered as type 2 in reality. So how to deal with the B2B payment? So next slide, there is another way to provide B2B payment services. That is, you may think about utilizing bank APIs to enable your customers to easily make payments. Electronic payment services have 2 functions. One is electronic remittance instruction services, which is provided by a service provider who receives remittance instructions online and relays this instruction to the customer's bank on behalf of the customer. Another one is account information retrieval services, which is provided by a service provider, which is engaged by the customer to obtain account information from the bank and provide it to the customer online. And this, if you'd like to do this business, the registration is required, and you must execute an electronic payment service contract with the banks with which the electronic payment service provider is connected. And actually, the All Bankers Association has set the form, the template of the API use agreement, and the electronic payment service provider will be binded by this contract with banks and must be subject to the strict security criteria and so on. And in case of cross-border remittance, the blockchain is, I think, one of the useful technology to enable the international money transfer because there is always a foreign exchange issue. So some money transmitter uses crypto or currency in the flow of their money transfer. that is so the sender. So firstly, the sender sends its local money to the money transmitter, and recipient will receive its local currency in its country. And in the middle of the cash flow, some money transmitter utilizes the cryptocurrency. And if you think about the using cryptocurrency, you may need to check the crypto assets exchange business regulations, because at the crypto assets exchange business, which is consists of this kind of conduct. So not only the purchase and sale of crypto assets or exchange for other crypto assets, intermediary is also regulated, and also the just the management of the user funds or just management for crypto assets for another person is also regulated. So and importantly, you need to check the cryptocurrency you may think about using, whether it is falls under the definition of crypto assets under the Payment Services Act. Crypto assets here, which is typically a Bitcoins, but also if you look at the items too, that means that it's a digital asset that's exchangeable with the items one of the crypto assets. For example, the Bitcoins is also the crypto assets under the Payment Services Act and will be regulated by the Payment Services Act. And further, so this year we will have the stablecoin regulations. There is no clear definitions about the stable coins, but it generally refers to the digital assets whose value is stabilized by being pegged to a specific asset using decentralized technology. And stable coins are broadly classified based on the mechanisms used to stabilize their value into those that are issued at a price linked to value of the legal tender and promise to be redeemable at the same price at the issue price. In equivalence thereof, in Japan we call the digital money type, and other one that seek to stabilize their value by using algorithms other than the digital money type. We usually call in Japan we usually call the crypto asset type. And under the Japanese law, crypto asset type stable coins that falls under the definition of crypto assets that is regulated by the like the previous slides. And digital money type stable coins is considered to as legal terms electronic payment instruments. And in that case, so the issuers is limited to having their banking business license or registered business operator as a funds transfer service. And also the intermediaries is regulated. And intermediary business is similar to the definition of the crypto asset exchange, and this requires registration. And intermediary related to the because that stablecoin issuers could be banks, and in case of the intermediaries relating to the bank issue stablecoins, which is regulated under the Banking Act. So there it is a little bit complicated. So so there are two laws: the Payment Services Act and Banking Act, that are regulated intermediaries, so-called stable digital money type stable coins. And lastly, I would like to introduce the credit card regulations. So typically, credit card issuing companies is regulated as a comprehensive, it's a legal term, comprehensive credit purchase intermediary that requires the registration under the Instrument Sales Act. And also, business operator, it's a very long term, but it's also the legal term. Business operator with concludes contract to process credit card number. It's typically the issuer or acquirer in an honest transaction and acquirer in an off-us transaction, or it's mostly a fintech companies, the payment service provider, in an honest or off-us transaction that is granted rights related to the merchant contract by the acquirer and has authority to make final decisions regarding the execution and termination of the contract. And it's also the registration required. And I note that the regulator for credit card business is Ministry of Economy, Trade, and Industry. So it's not the Financial Services Agency. So it's a bit complicated. If you do a credit card related business, you must consult with the MITI. But other than that, you need to consult with the FSA. And what's the difference? It's a so credit card is always connected to the actual purchase of goods or services transactions, but just the money transmission is not limited to the those kind of purchasing of goods or services, but it's just a funds transfer. So that's the difference. This is the end of my presentation. Thank you very much.
Thank you so much, Yuri, especially for breaking down everything in such simple terms, especially for people like us. I will now welcome Dr. Tran from Vietnam. Dr. Tran holds a PhD of law from the National University of Singapore. He is a law professor at Ho Chi Minh City University of Law and is also a listed arbitrator of the Vietnam International Arbitration Center. Dr. Tran is a founding member of DLN Partners and currently leads the corporate and M&A practice of the firm. He works with venture capital funds, private investors in high-tech and renewable energy sectors. Please go ahead, Dr. Tran. I think you're on mute, Dr. Tran.
Right. Okay. Yeah. So thank you, Ashima, for your kind introductions. I would like to now to give some overview on the legal framework of Vietnam on the fintechs and sector. Yeah, so generally, Vietnam has the Vietnamese government is favorable for implementing multiple policies and programs for application and development of technology in general policy. However, until now, we have very few regulations on various sectors related to technology, including the fintech technology. Yet, I think that based on a report of the fintech report in Vietnam to 2020, Vietnam is one of the very promising market for fintech in general. Why? Because we have quite a big population of around 95 million, and about 36 million or living in the city, and the internet penetration is about 95%, which is quite high in compared to some other countries. And I just want to give some statistics that we on the development of the fintechs through the 2017 to 2020, and you can see that the fintechs in Vietnam developed very much in the area of payments. Fintech related to payment is the most attractive and most developed sectors in Vietnam so far. And if we look at the fintech players in Vietnam, up to now we don't have too many companies on the fintech area. Only around 115 startups based on the report of the central banks of Vietnam, and most of these companies, I think, are engaged in the payments, B2B lendings, blockchain, POS, and wealth management. Yes, about 75% of them are engaging in that sectors, and around 36 fintech payments are conducting the lending activities. Yeah, so most in general, the most popular and the most developed sectors in fintech sectors Vietnam is related to payments. However, the payment because of the lack of regulatory framework and the development of fintechs usually only initiated by financial institutions or the bank. Yeah, so it is to say that the B2B fintech payments is so far is not very well developed in Vietnam. And in my presentation for following parts, I will analyze some issues of the Vietnamese regulatory framework for the fintechs business. Yeah, so here in my slide you can see some very well-developed fintechs players, but most of them are only conducting the B2C payments only. And from our research, the market predominantly consists of the B2C, and only few players involved in B2B payments service, and even I can name like three, like the VNP, Trusting Socials, and Kilimo Finance. But even those players, they only conduct very narrow service for the fintech, and all this because we don't have a very clear regulatory framework for the fintech sectors. So if we come back to what I mentioned before, actually Vietnam is the policy in general of the Vietnamese government is encouraging the development of favorable conditions and for the technology, IT technology, and all kind of service. However, the agents, the ministries and the agencies, the government agencies that involving in management of the all this service, they are quite cautious in adopting new regulations and promoting the regulations. The government the position is they take a position wait and see approach under which the regulators mostly play the role of primary observers. Therefore, the fintech business in Vietnam, mostly developed on the existing regulatory frameworks and with the without any specific regulation that promoting the fintech service as such. However, if you look at the picture, you can see that they have to rely on the various law like IP law, IT law, the law on high tech, law on science and technology, law on cyber information security, and the law on cyber securities. But the government from time to time adopt some guidelines some governmental guidelines, mostly on the the directions of the policies. But as a regulation, so far we don't have any explicit regulation on the fintechs, and which is, I think, is vital for the development of the fintechs service in Vietnam. Since 2020, I think during the COVID-19, I think the government realized that the fintech is payments is one of the very efficient methods for the the development of the economy. So in the year of 2020, the Prime Minister have issued this decision approving the scheme for development of the cashless payment in Vietnam, and this with this they request the Central Bank of Vietnam to develop the scheme or the action plan for the development of the cashless payment in for period 21 and 2025. Yeah, so that decision is very important. It's like it is considered as the milestone for Vietnam to develop some regulations on the fintech service. So I think, but then I would like to highlight about maybe 5 critical issues for the B2B fintech practice in Vietnam. First and foremost, it is the problem of absence of regulatory framework for B2B payments. Currently, there is only regulations on the payment of intermediaries, which does not related to the B2B fintech activities, such as the credit operations, lending, mortgage, insurance. So, if the companies wish to involve in fintech, they have to apply the traditional rules on the such kind of service, which is not totally protecting for them. The second issue is very also critical, is that there is no legal regulatory framework to define the products, service standards, legal positions on establishment and operation of condition of the fintech companies. So it is unclear who can lend, who can borrow, under what condition, and how is the capital recovered. So because of that, it is very hard for the companies to manage the service, and for the customers to protect their interests. There is also absence of the supervisory mechanism to ensure the financial safety, and I think that is the very big issues and problems preventing the development of B2B fintech payment in Vietnam. So most, and as I mentioned earlier, now at this point of time, only the B2C fintech practice is developed because it's initiated by the bank. The bank is the lenders, so they can control more or less. But for the B2B, it is very risky for the party to take part, and therefore it is a very lack of development. The third issues, and I would like to highlight, is the lack of coordination mechanism between the banks and the fintech activities, especially in the B2B sectors. The bank in Vietnam at this point of time are quite silent, or they don't show strong initiative for development or promotion of B2B, even if they are acting as the intermediary. They more focus on the B2C, which is the big part as the lenders. Another problems I think that also prevent development of the B2B fintechs in Vietnam is the very undeveloped regulatory framework for cryptocurrencies and the crypto assets. At this point of time, the regulatory framework regarding the cryptocurrencies and crypto assets is generally very vague and undeveloped in many aspects. The cryptocurrencies are neither considered as a property or under the civil code, nor as assets in the civil codes. So and the state banks also have doesn't show any clear positions in regarding to this issue. So the cryptocurrency are kind of stuck. The people still do the trading on the cryptocurrencies, but it is not regulated by the law. It is not. It is, and if there is any dispute, it is very hard to protect for the all the party involved. In 2018, of course, the government have the Prime Minister have issued a directive to request the State Bank of Vietnam to develop the regulations on the cryptocurrencies. But until now, we still have yet got these regulations. So still wait for the bank to issue the regulation on cryptocurrency. And I think if without this, it is very hard to facilitate the development of B2B fintech service in Vietnam. And the fifth issues that I think that's very critical for preventing the development of the B2B fintech practice is that the fintech operation can be based on the decentralized finance, the fee lending, or where the cryptocurrencies are operating on the blockchain, and it can be mean as for financial obligations. However, as I mentioned, the central bank, the State Bank of Vietnam, does not consider cryptocurrencies as a mean for payments. Therefore, the fee business also cannot operate effectively. So I think with these 5 issues, I think the Vietnamese have to overcome to make the market they operate well. And I think the government have to introduce the regulations to promote to overcome all these issues, to make it effective for the service. And I think I think there are 2 approach for these matters. The first is to I think to increase the application of the sandbox regimes. In Vietnam, up to now, the government already recognized the sandbox regimes where they allow the banks to apply the pilot mechanism for the fintechs, but it's very they allow only very few players on this, and I think that they have to develop a more aggressive regime for the sandbox, so that more startups can involve and take part in this Fintech's business. And at the moment, only the two subjects are available for the Fintech mechanism is the credit institution and some financial institution, the Fintech companies that registered with the state banks. And the government now promised to introduce a decree on the regulation of regulatory framework for control testing on financial technology activities in the banking sectors. And we hope that when this decree is introduced, that the sandbox regime can be more easy to apply. For the long-term solutions, I think that it is necessary to establish a mechanism to match information for the borrower and lenders across the entire bank system, including non-banking institutions. And there are three aspects that need to be really regulated. First is the use of shared blockchain technology to record the transaction, enabling all the credit providers to access to information. Second is the application of the integrated control over the regulated cryptocurrency. And the third is the applications of blockchain allied with the development of the e-government. With these three aspects, I think the legal regulatory framework and also the infrastructure for the B2B fintech will be developed well in Vietnam. So that is the end of my presentations, and I will be very happy to receive your question and discuss more about the issues and of Vietnam. Thank you very much for your attention.
Well, thank you so much, Dr. Tran. That was very helpful, and I hope that the government will catch up soon with your long-term solutions. Next up, we have Nandini from India. Nandini is a corporate lawyer with over 12 years of work experience in law firms as well as in-house roles. She has spent the last 8 years specifically focusing on the payments and fintech space in India. She's helped businesses obtain regulatory licenses, ensure compliance, and build businesses. She's obviously had the front row seat to the growth of fintech in India and continues to be involved in the ever-evolving space of payments. And currently, she's a senior corporate counsel of payments at Amazon Pay India. Over to you, Nandini.
Thank you so much, Ashima, and thanks everyone for joining this and for giving me an opportunity to speak about what's happening in India. Honestly, I've learned a lot also from this session, so thank you so much for that. So in the next 10 minutes, I want to just give you an overview of the payment regulation context in India in terms of what's happening on ground, how the regulators are viewing it. And more specifically, I'll spend a few minutes on the payment processing B2B business that's in India, and that's something that Amazon Pay in India is doing as well. So just to set context, India is a heavily cash-driven economy. People for the longest time prefer, making payments with cash. So it's been a huge shift for us in terms of moving from a cash-driven economy to a digital payments economy. What has driven this, however, has been like multiple different combinations. One, I think, is hugely attributable to fintechs entering the space and making payments so much more seamless and easy and safe that customers found it such a good alternative to using cash. And like you can imagine, from a customer's perspective, incentives always help. So another trend you'd see a lot in India is getting cashbacks, getting reward points for using digital payments. And that's a huge driver in terms of the kind of payment instruments that get used. And like I said, it goes without saying, without customers having that confidence that their money is safe and in good hands, there's no way you can make the transition. So that's on the customer side. This on the other side, we've seen a huge improvement in terms of how these digital payments are being accepted, right? Because there are issuers who issue these instruments, but we also need to make sure the ecosystem is ready to accept the payments. So making sure that not just online merchants, but even your neighborhood store, that'll be your mom and pop stores that are there, bringing them within the fold of digital payments, that has, I think, contributed largely to the developments we have seen here in the past 5-10 years. I've just put some numbers on the screen as well, just to give you a sense of how big it is and how big we expect it to become in India. So that's on in terms of what's happening on ground. Just to give you the perspective of the regulator as well, both the government in India as well as the regulator has really been promoting the case of moving towards digital payments. Uh, of course, their core principles are honestly very consistent across all the payment regulations you'll see in India. Protection of customers, their money, the protection of the ecosystem itself, and ensuring there's accountability across the board. So if you pick any regulation, be it the banking regulations or the non-banking payment regulations, you'll see themes consistent across, which are on security, which are on identification of who you're dealing with, and of course, ongoing consistent tracking of transactions. Uh, so banking sector, of course, has been around for the longest time, and their payment instruments, card instruments have been there for the longest time. But what has made a big difference for us here is, like I said, the stepping in of fintechs. They kind of help bridge a lot of gaps that existed between these issued products and how they're actually adopted. So in India, we have seen a huge increase in terms of how online payments are being adopted across the board. And it's largely attributable also to having so many options that have developed in the past few years. We have digital wallets, which is like a one-click payment experience that customers can have. We have something called UPI, or Unified Payments Interface, which makes it a very seamless experience for you using your phone to transfer money from any of your bank accounts to another person, or to make a payment, anything at all. And that's in fact getting adopted even globally as we speak now. We've had innovation in terms of buy now, pay later products. So it's not just about customers having the traditional, credit card or taking a loan from banks. Very, very seamless ways in which customers can get credit lines so that they can make their purchases from merchants. So a lot of innovation there as well. What I can tell you about how this ties in with the Indian regulators, they've honestly been very, very accommodative and encouraging of innovation. They have set up mechanisms like sandboxes, like how my colleagues also mentioned, wherein you can encourage somebody to just try out new things. And if it works well, the regulator gives you a framework to take it up at scale. Of course, being their core intent being protection and ensuring that there is stability in the ecosystem, they constantly keep reviewing what's happening on ground. So how they balance out the innovation as well as the security of the ecosystem is basically this: they wait and watch. They allow innovation to happen, but when they see that either that has grown very large that it can impact the ecosystem itself, or they start noticing any red flags in terms of customers facing issues, there being a lot of frauds, a lot of security issues, that's when we have seen the regulators step in. And when they step in, of course, it depends on a case-to-case basis whether they just want to give broad guidelines in terms of, okay, this is how you need to operate your payments business. Or in many instances, they actually bring in a licensed regime so that they have complete visibility of the entities who are doing these payments business, plus control in the sense of, knowing what you're doing, getting whatever data they need, plus audits on a periodic basis. So all of these are something that the regulator looks for. Coming to the B2B payments in India, so like I was mentioning, I'll probably just talk about the various components in this ecosystem first, and then just talk about how they're connected. So we have the banking entities which have the traditional banking products, be it your net banking, fund transfer, cards issued, and we also have non-bank entities which are right now licensed under the Indian regulator. So it could be issuers of wallets, gift cards, your card networks, all of them fall in that bucket. So we have these group of entities who provide you the payment instrument. Then we have the merchants who actually want to be able to accept payments using those instruments. And of course, there are customers who want to make payments using that instrument. So the ecosystem is primarily of this. What would traditionally be happen, and the reason for it not being adopted at such scale, was that the enablement for merchants to use these instruments was very difficult. It either involved them having to tie up separately with multiple different entities so that their payment instruments can be accepted on the merchant platform, or they would have very limited options in terms of what they could offer their customers. So that's where payment processors, fintechs came to play. And right now, if you look at how it's structured generally in India, this is just a sample structure, but generally how it's structured is the payment processors play a central role where they hold in all of these different components together. So they do the heavy lifting of signing up with banks, non-banks, integrating with them, and getting all the various payment options as one bouquet of services. They then take that entire suite of services and they approach merchants and say, hey, you just need to work with me, one single entity. And by doing that, I will provide you a entire gamut of payment options that you can offer your customers. And I will take care of your end-to-end funds handling. I will make sure it's collected from the customer. I will make sure it's given to you. In case of refunds, I will take care of everything, right? So it suddenly simplified how money was being collected, how payments were being made. And that's we also had a lot of support from the government for some instruments wherein they gave free of charge payment instruments, they gave incentives. So there was a lot of push from across all sides to increase the adoption of digital payments. And that's what really helped. Because right now in India, for example, whether you're doing a transaction on online platform like Amazon, or you're going to say buy a pen from your neighborhood stationery shop, all of them accept digital payments. And there are very simplified mechanisms by which they can do it. So be it a 2 rupee transaction or a 2000 rupee transaction, you will see an increased use of digital payments in India. And almost all of them are simply just by apps on your phone. So that's where fintechs played that layer of bringing all of this together, which really benefited merchants as well. And it's brought a lot of visibility also for the government, for the regulator, in terms of how money is moving through the ecosystem. So this is just an overview of how how it's happening on ground. I'll just take a minute to talk about the regulatory framework behind this. There have been these kind of payment processing entities in play for a very long time, lesser number of players back then and a lot more today. But for the longest time, we just had the intermediary guidelines of 2009, which was a very simple regulation. Crux of it was customer money needs to be protected. So you had to put it in a nodal kind of an account or an escrow account where it's safe. The claims are of the customers and the merchants. And there was a obligation in terms of within how many days you need to ensure the money gets to the end beneficiary. That was it, right? And the entire ecosystem has been working on the basis of that, ensuring that money reaches the right person at the right time, and there is complete traceability of funds. So like I was mentioning, this as businesses grow, as there is more and more participants in this, the regulators assess and reassess whether they need to change anything in the regulations. And something like that happened a few years ago, where the regulator noticed that there are a lot of players coming into the space, and the layering that happens from a bank to a merchant to a customer. There were multiple technology companies in the play. So they were trying to understand how they work with the ecosystem, and basis that they came up with they felt the need to regulate the space from the perspective of, again, protecting the ecosystem, protecting the customers, because this was growing to a massive scale. And that's when they came out with the payment aggregator guidelines in 2020, where they brought in a license regime now. So as on date, the regulations that apply to this is basically, if you want to be enabling this kind of payment services to merchants, right, and you are not a bank issuing bank, you are expected to apply for and obtain a payment aggregator license. So it allows you to aggregate various payment options, as the name says. So you apply for a license, you get a license, and only then can you, carry on this business anymore. So if you don't get a license, there are businesses which have been asked to wrap up their existing businesses. Now, if an entity gets a license in this, there are a whole set of guidelines which applies in terms of day-to-day compliance. It covers aspects of merchant onboarding in terms of, how you need to have a policy which says what is the KYC or the due diligence you'll do of the merchant before you onboard them. There are requirements in terms of transaction monitoring. This is largely from the perspective of checking for suspicious transactions, checking for anti-money laundering flags, red flags, any of those kind of things. There's a whole bunch of technology-related standards in the regulations. This covers requirements in terms of what you need to set up as a base, what you need to do as regular system audits, ensuring encryption of data, all of those aspects. So end-to-end technology-related controls, security-related controls have been prescribed. And as you can imagine, grievance handling, because if you recollect the flow that I just showed in the previous thing, now with processes being in the center of all of this, the regulator has put an additional onus that, okay, now you need to ensure that if there is a customer grievance, you create an ecosystem or you create a process wherein you work with these multiple different entities and you resolve the issue, right? Because the end objective is resolution. So now there's a comprehensive grievance mechanism that needs to be set up. And lastly, there will be periodic reviews by the regulator. This generally covers system-related reviews as well as operational reviews, just to make sure everything is being operated as per the guidelines. And also like regular reporting requirements to the regulator, wherein they keep a tab to make sure things are progressing as they expect it to progress. That's broadly about what's happening right now. Honestly, there's a lot more, like I said, in terms of digital payments in India, and each instrument at this point in time, almost every instrument has a regulation behind it, has a licensing requirement behind it. But like I said, there is a lot more innovation to come, even in terms of digital currency, even in terms of existing products being expanded in terms of their use, their adoption. There's a lot more coming in the next few years. Even in terms of adoption of technology, the regulators in India have been much more open right now to look at adopting technology, whereas earlier there was a bit of hesitation and there was always that process requirement where you needed human intervention. So we are seeing them move more and more towards relying on technology for a lot of this. So that's a great development that we see. Of course, it goes without saying, more innovation, more products. There's probably going to be more frameworks, more scrutiny that's going to come our way. But I think so far, at least, it's been a good balance of the two, and it's really helped us as a country grow in this space. So it's exciting times ahead. If any of you are interested, I would recommend you just search for the Reserve Bank of India's Vision Statement 2025. It gives you a good overview of how the regulator is thinking, what are the areas they're planning to look into, regulate. So it's the entire gamut of it. So a lot of interesting times ahead. And yeah, I hope you guys, if you're interested in knowing anything more, feel free to reach out. I'd be happy to do that. Thank you so much. Back to you, Ashima.
Wow. Thank you so much, Nandini. That was very insightful, especially with, developments in India. That's what we keep a, keen track on. But I think the good thing is that the regulators are, understanding the importance of these solutions and, making strides in sort of improving the payment structures. So that's good. I would now like to welcome Tina from Hong Kong. Tina is our final speaker for today. She heads the business development in Onyx Coin Systems for the digital asset and investment management segments. Onyx is a business within JP Morgan. Tina's banking career spans over 10 years across the Hong Kong, US, and India offices of Lehman Brothers and BNP Paribas, mainly in institutional equities. Over to you, Tina.
Thank you, Ashima. Everyone, it's really great to be here. I was a little nervous about being the fifth speaker in the post-afternoon session, in the post-lunch session, but the speakers before me have been fantastic. So they've held my interest, so I'm sure everyone else is still glued to their seats. So as Ashima mentioned, I'm from the Onyx team of JP Morgan. I am not a legal expert in any way. Onyx is the blockchain arm of JP Morgan. And within Onyx, I'm part of the Coin Systems team. Coin Systems is has blockchain solutions. Give me 1 second, please. Let this full screen. Onyx Coin Systems provides blockchain solutions to find solutions to cross-border payments. That's where we are from. And one thing I would mention is that all of our solutions have the same status as a bank account with JP Morgan. So anyone who's using our solutions is not operating in any sort of a regulatory gray area. Everything is kosher and has the same status, as I said, as a regular account with JP Morgan. Why we exist? We exist to solve the problems in cross-border payments. So cross-border payments are currently rife with issues. You cannot make transfers 24/7, for example. You're limited by the cutoff hours of your branches. You can't make transfers early in the morning, late night, weekends, public holidays. There's a lot of uncertainty. There's a lot of lack of transparency when you're doing these cross-border transactions. And because of that, because you're not sure that your funds will reach where they are supposed to reach on time, you end up paying in advance, you end up pre-funding certain accounts, and that has a cost attached to it. And even today, the fact that we're using manually sending instructions instead of having them automated, I think that's a real embarrassment. These are all the issues in cross-border payments that we hope to solve. And we hope to solve these problems in cross-border payments without actually creating a new form of money, for example. What we are actually doing is we are overhauling the infrastructure through which traditional payments are made. And the new technology that we are applying is blockchain technology. So today I'm going to talk mainly about one product, which is JPM Coin System. We have additional products as well, but this is the one that I want to focus on. Excuse me. JPM Coin System, because of the name, it's often assumed that it's a stable coin or it's some sort of a cryptocurrency. So I want to specify that it absolutely is not one. It is essentially a bank account that sits on blockchain. So you can, as a customer of JP Morgan, have a traditional bank account with us, which sits on the JP Morgan extremely secure mainframe, or you can have a blockchain deposit account that sits on an equally secure blockchain, which is the Quorum blockchain. Now, what is the advantage of having a bank account that sits on blockchain? Well, it solves for all of the problems that I mentioned in the previous slide in cross-border payments. So your cross-border payments now become 24/7, seamless, real-time. And I want to stress on this. We're not talking about domestic 24/7, because domestic 24/7 is actually fairly straightforward. It's fairly simple to do. We're not even talking about small retail values. We're not talking about buying a $500 shoe on Zalora. We are talking about up to $200 million worth of transactions cross-border, even on weekends. And that is what our product is trying to support. Sorry. The way we do that is with blockchain deposit accounts. And as long as the client has accounts in the 8 locations that you see on the screen in blue, which is New York, London, Dublin, Frankfurt, Luxembourg, Hong Kong, or Singapore, you can transfer funds across these locations 24/7, seamlessly, any time of day or night, irrespective of the amounts. We are currently available in US dollars. Very, very soon, we'll be adding euro as well. A GBP is on the roadmap for next year, but our aim is to have all the G10 currencies plus Hong Kong dollars and Singapore dollars in the network. So the flexibility that a solution like this provides, I think, can be game-changing. And the experience that we provide is very, very similar to what someone is already using. So just like you can use the internet without knowing what HTTP is or what TPI-CAP is, TP-CIP is, similarly, you should be able to use blockchain technology without actually understanding what is blockchain technology, what is the consensus mechanism. None of these things should be abstracted away, and that's what we do. So for our user, it's irrelevant what the underlying technology is, as long as they know that it is secure and it gives them added functionality than what they had before. So that's what we are trying to do with our system. From the user experience, it is the same as it used to be, except that now it's 24/7. It is programmable and the many added functionality that you get over and above this. Now, because when we use the term blockchain, it is often assumed that this is futuristic. This is something that's going to come some years from now. But I want to specify that we've been live for 2.5 years. In the last year, we executed $322 billion using our network. And this was last year. This year, we are already at 700 billion. Any transaction can be executed in under 2 minutes. Again, as I said, irrespective of the time of day. And the maximum size of a transaction is 200 million. Now, while there is a limit of 200 million, if someone wants to send $1 billion, they can just send 5 transactions of 200 million each. So this is not a retail-focused solution. This is an institution-focused solution for clients for whom time is of the essence, who want the flexibility to be able to pay unexpected sums of money at any time of day. Now, JPM Coin Systems is the product that has been live for the last 2.5 years. But I do want to focus on a few additional products as well. I want to talk briefly about them so that it gives you an idea of our vision and how we think the world will change in the next few years. Now, JPM Coin, as I said, has been live for the last 2.5 years. This has been fully tried, tested. Any bugs in the initial years have now been fully worked out. And now it is a mature product with, as I said, $700 billion already being transacted. Now, the next step is programmability. Programmability is like JPM Coin, but on steroids, because with JPM Coin, you need to manually send instructions. With programmability, you can automate your account to do what you want it to do. So you can automate your account to say that if the exchange rate between USD and Japanese yen becomes X, then transfer funds from account A to account B. You don't have to manually send in that instruction, you can program it. You could say that if LIBOR rate rises to 6%, transfer funds to a certain account. You can just say if the Met Department says that it's raining in Alaska, you should transfer funds from this account to that account. So that kind of automation we are bringing in with programmability. The next step is Partio. So for JPM Coin System, the client actually needs to be a customer of JPM Coin. So it is a closed loop solution, unlike UPI that Nandini was talking about earlier. We do understand that the future is open and interoperable. It's not going to be a closed loop solution. Partio is a step in that direction. So it's a partnership that we have with DBS and Temasek, where if a client of JP Morgan wants to transfer funds in either US dollars or Singapore dollars to a client of DBS, then they can do so using the Partio network. And this is the starting point. We're adding additional currencies and additional banks so that the solution is not just for JP Morgan customers, but for the entire world. Now, Partio, while it is a step above JPM Coin in the sense that it includes new sets of clients, it is still a permissioned solution. So we need other banks to join Partio to be able to give the benefit of this to their customers. The next step for us is Project Guardian. Project Guardian is a huge leap for us because here we're going on public blockchain. So JPM Coin was a closed loop JPM solution on the private JPM blockchain. Partio becomes a multi-bank, multi-currency solution, but still permissioned. Project Guardian is public blockchain. So what we've done is we've taken deposits in Singapore dollars, we've taken deposits in Japanese yen, we put them on the Polygon network, which is a public blockchain and a layer 2 of Ethereum. And we've used a version of Aave, which is a DeFi protocol, to do a spot FX transaction. So again, this is a step-by-step direction, and I want to showcase that while we're starting with cross-border, large amounts of transfers, giving the flexibility to the client, starting with JP Morgan clients, extending to clients of other banks, and then eventually going all out in the bank, in the public blockchain, but all of it in a fully compliant manner because any participant would be verified in advance. And with that, I've come to the end of my session. I'll take any questions after handing the mic back to Ashima.
Wow, thank you so much, Tina, for that interesting industry perspective that we all needed amongst all the lawyers that we have here. Well, I guess that's the end of the presentation, so we can open the floor to questions. We do have some pre-submitted questions by the people who had signed up. I'm just going to go through them, and I think most of the questions were covered in the presentations because we received them beforehand. But see if you can elaborate anything further on them. So one of the questions was, how does the blockchain solution aim to be seamless in cross-border transactions, given the regulatory differences between the countries? Yuri or Tina, would you like to address that? or Nandini?
So maybe I think Tina wants to say something. In India, unfortunately, not yet there. So maybe in next year's session, hopefully.
Yes.
Sure, let me take that. So the solution that we have is actually using blockchain infrastructure to facilitate cross-border transactions that are traditional. We are not actually using cryptocurrency, so I'm not sure if I'm the right person to answer that question, but I will say this. The current payment system is very old. If you see the basic infrastructure, it's maybe 50 years old. And the way we have it has been upgraded or modernized has been in a very piecemeal, siloed fashion. So we've ended up with this set of siloed structures which don't necessarily talk to each other. And anytime that there is an issue, a patch is installed. So there's a huge need for an upgrade. And a blockchain-based upgrade would be ideal. The reason I say that is because you can now do everything that traditional finance can do, but more seamlessly with additional functionality. But you can also now open up the world to many new things which are novel, which couldn't have happened before, which is you can have decentralized money, you can have programmable money, you can have completely new forms of money, which is everything from stablecoin to cryptocurrencies with their unique features. So I think this is a base technology, and our imagination, it's up to our imagination in terms of what can be built on top of it. So yeah, I think I'll just stop there.
I just want to add that I think if just give an example of Vietnam, I think that actually the very important thing is that the infrastructure and the means for the facilitation of the transactions. So in Vietnam, even though we don't have any regulatory frameworks, but the business still conduct the service, the business, and I think of course without the regulatory framework, it's very risky for the party involved. But I think one of the nature of the fintech is that the trust between the parties. So I think I think what our colleague have mentioned is right, and I think that from my point of view, it is very important to have the infrastructure, and the means for this is, for example, the cryptocurrency is one of the way to overcome most of the barriers. So I guess that that could help to facilitate even the cross-border transactions more efficiently, if the country can regulate on the means of the transactions.
I'd like to add two things. So one thing is about the blockchain. Blockchain is a very useful technology, and besides the payment, currently there is a companies in Japan to provide services in the international trade sector. So that's company's services is to enable all the parties of the international trade to exchange information about the trading. And I'm not sure that services could develop to the payment services, but that's another aspect of the blockchain technologies is utilized now. And the second thing is about the cross-border payments, remittance. And from the perspective of the service provider, money transmitter, currently, some money transmitter is doing business in each jurisdiction because that the regulations is provided in jurisdictions. There is no common besides the EU. There is no common regulations, rules about the payment services. So in reality, if you want to expand the payment services worldwide, you have to comply with the India's regulations, Singapore's regulations, Vietnamese regulations, and Japan's regulations, and Hong Kong regulations. So it's very cumbersome especially for startups, because you must develop the system in accordance with the regulations in each jurisdiction. So it's necessary to think about how to develop your payment services to what country. It's depending on the regulations and the cost of the development of systems. Asima, you mute.
Yeah, I was saying, I just wanted to add that, when, like Dr. Fan was saying, it's all about trust between the parties, and when that trust breaks down, you'd have commercial disputes lawyers like us would come into the picture. But I feel like it's still a bit of a learning curve for us. When we get cryptocurrency related disputes, it's such a niche thing, no regulations. But yeah, we are also getting there. Right. So that's all I think we have time for today. In closing, I would like to just thank all the esteemed panelists for sharing your views and expertise on the panel. Thank you most importantly to all the participants for tuning in today. The webinar wouldn't have been possible without you. And I hope that you found it interesting, especially to hear from eminent speakers from such a wide variety of jurisdictions. And finally, I want to thank Law Asia and especially the events committee, Magda and Shana, for all your assistance and superb organization. Have a good day, everyone. Thank you so much. Bye.